Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this session, we'll be analyzing the markets for the week ended 9th March 2018, and we're going to be starting off with the S&P 500 E-mini futures market. So for this market, we were finally able to see some strong price movement over the past week. The bulls were mostly in control as price bounced off this shorter term, but very responsive and significant support and resistance level. We've had multiple occasions in the past when price was able to rebound off of this level, either finding support or resistance at it. Over the past week, we saw price pulling back to it, holding as support, and just continuing the way up, basically hitting this next major resistance hurdle just underneath the 2800 level. The important thing that we're noting here is a strong weekly close. So you can see on Friday, price was able to close very strongly at this level. So it wasn't a candlestick that would poke into the 2800 level and this resistance level here and close way down below, leaving a wick to the upside. That would have suggested the price is still finding some resistance at the 2800 level. Instead, we have a very, very strong close at the just underneath 2800 price level, and that could potentially be a signal that we could have more bullish activity in the forthcoming week. Eventually, we may even be able to test the 2880 major resistance, which is basically where we had a lot of selling come into the market almost a month ago, more than a month ago. But we also note that because price is still caught up in this wide range here, marked by the lows around here and the resistance at 2880, we may also just continue to be a little bit more sideways and choppy like we are right now, which could mean that we may actually be able to bounce off of this level for a little bit and then push back to it, maybe break it on the second attempt, then pull back to it again, hold as support, and then continue our way back up. Or we could just continue to chop around, maybe even within this more tighter range marked by the more short-term support resistance level that we drew earlier here, and the resistance just underneath the 2800 level. But just looking at the strong close, we would rather favor a break to the upside above the 2800 level and possibly see price pushing towards the 2880 resistance, and possibly for the more longer term continue on with this very, very strong momentum to the upside that we've seen the American stock indices be in for the last several months now. Okay, so the next market we're going to be looking at here is the light crude oil futures market, which over the past week posted price action that suggests that the market is trading in a very tight and narrow range, possibly reminiscent of a wedge pattern formation at multiple levels. What we mean by that is simply the fact that that price seems caught up in a wedge pattern that is actually tucked into a longer term wedge pattern. So the longer term wedge pattern is right around here. As we can see, there are multiple instances of support around here on the support trend line, and we have multiple touches proving that we have a resistance trend line in effect here as well, and they're really just coinciding and merging together to create a more tighter space for price to move in, possibly indicating at a breakout in either direction eventually. But recent weeks price action suggests that we're also actually getting tucked within a more tighter wedge pattern formation that is more evident and clear if we switch to a lower time frame. So if we switch to this lower time frame, which in this case I'm looking at the 4-hour time frame, we can see that we have this more shorter term support trend line, again very responsive, multiple instances when price was really able to hold as support at it, and of course we have this resistance trend line that's still pretty wide, but it still indicates a channel that price is following very religiously here. It really remains to be seen. We'll see a third touch of this resistance trend line and bounce again. That would eventually probably allow price to further tighten up in this channel, and we could actually see an interesting development where a breakout from this more shorter term, tighter wedge pattern formation could actually provide price the momentum that it needs to eventually break out of the more longer term wedge pattern that we drew on the daily time frame, allowing price to post or be able to build the momentum towards a more sustained price movement, longer term price movement in either direction. So while we're seeing price more or less just chopping around and being sideways with no definitive movement in one direction, we're still anticipating that we could see some definitive action for this market in the coming week or weeks to come as price further tightens up into these shorter term and longer term wedge pattern formations. Okay, so next up we look at the euro currency futures market, which over the past week continued on with the sideways consolidating theme that we've witnessed for this market for the past few weeks now, as prices basically caught up between the 1.25 resistance level over here and is basically fearful of the 1.21 level that's just tucked around over here, which is a more longer term support and resistance level for this market. And actually, if you just zoom out to quickly give you the view of these two levels, it should be clearer why price is consolidating within the range that we just identified. So the 1.25 level here clearly marks as an important level because we've had two indications of support and resistance off of it in the past. And the 1.21 level that runs right around here obviously lines up with a very, very significant swing low that the market was able to print off the 1.21 level in the past, way back in the past, and two more recent instances when it was able to hold as resistance at the level. We discussed in our last week's video how price just fell shy of actually touching and rebounding off of the 1.21 level and actually just rebounded a little bit further away from it. And now we're just seeing more sideways action for this market. So as we zoom back into the market action here, we can see that we're actually seeing price action that is similar to what we saw around here, where price was also consolidating and going sideways following a strong move up, and that was eventually able to break past this resistance just around the 1.2 big round number, and we were able to see the next major move towards the upside before price started consolidating again. We anticipate a similar kind of an action again around here, although we're seeing price create these lower lows in the market and obviously lower highs as well. We're still just finding this market sort of caught up in consolidating between the 1.25 and the 1.21 important support and resistance levels, and we're eventually anticipating a break of either of those levels for price to be able to make a more sustained move in either direction, which naturally attracts traders more. For this market, we're also looking at this at the support trend line around here, which will line up really well with the 1.21 support and resistance level, and should price actually print another lower low in line with the lower lows that we've been seeing this market print over the past few weeks, and should price basically threaten to break the 1.21 to the downside, we will also have a trendline breakout play in confluence with the breakout of the 1.21 level as well, which would make the situation very interesting for sellers for sure. So we're going to have to wait for this market to develop a little bit more and give us more definitive indications of where longer term direction of this market is going to be based on how it behaves either around the 1.21 level or if we see a strong move back up at the 1.25 level. Okay, so the next market we're going to be looking at here is the gold futures market, which in behavior over the past few weeks has been very similar to the euro currency futures market that we analyzed before this market, and that's precisely the reason why we wanted to group the two together so as to make for all the apples to apples analysis that we're doing for these markets together. So for the gold market, we're looking at the 1300 major round number and a more thickish support and resistance area around the 1300 round number as providing very legitimate support for this market. And over the top, we've got this again a thicker resistance area marked by this extremely important swing high that we saw post off the 1350 1360 resistance area around here. And we had two other instances over the recent past when price was able to rebound off the same resistance area very, very strongly. So like the euro market, we're seeing lower lows here as well as lower highs here, which should technically suggest that we're in a downtrend here. but we'll still just categorize this as a market that's consolidating between two extremely important longer-term horizontal support and resistance levels, meanwhile reacting and responding to more shorter-term levels that are tucked within this consolidation zone. So by that we mean this level over here that on Friday we saw price responding to. So in the past we've had a minor instance of support at this level. We had a major instance of support at this level over here, and on Friday you can see that we had a bearish candlestick that almost poked this 1310-ish shorter term support and resistance level, and we see a wick to the downside suggesting that some buying once again came into the market, which is really a typical characteristic of a weak sideways market, that it not only responds and reacts to the major levels in the area, it also will more times than not, in fact quite often, rebound and respond to even the shorter term levels that are usually not a very major concern when the market is trending in one direction really smoothly. So until we see price develop a situation where we anticipate a break either to the downside underneath the 1300 level or a break off this major resistance around here, we suspect that this market will likely just continue to consolidate and be choppy. Okay, so the next market we're going to be looking at here is the 10-year Treasury note futures market, which based on prior week's market action suggests that we're seeing the sell side momentum here kind of weighed down around the 120 big round number, which we talked about in our previous video as well, as holding a lot of prominence and importance in allowing price to develop more downside momentum. So we've been favoring a downside momentum since price broke out of this extremely important longer term support level following a very major build-up above the level initially when price was after which price was able to build momentum to the downside, eventually hit the support 122.50 and break through strongly. We even saw an initial pullback and a pullback later on, which once again held literally to the tick at this important support level, former support level that turned into resistance. But aside from that, we really haven't seen any kind of major strong downside momentum for this market at all. We did see price create this support here. We broke through the support, we pulled back, we held as resistance, but we're looking at the 120 round number as one that's providing extremely solid support to this market. And if we zoom into the market action here, we're seeing signs of implicit divergence starting to kick in as well. And for those of you who may not be aware of what implicit divergence is, it's basically price being unable to close dominantly and strongly beyond prior candlestick highs and lows. So if we mark out this low, this candlestick low over here, we can see that price really hasn't been able to venture past this low, this candlestick low, which basically lines up 120 round number as well. And we're now starting to see wicks to the upside, suggesting that buying is starting to kick in on this market here. And so just looking by how heavy that the market has become around the 120 level, we can throw in this trend line over here and see how all these bar highs and candlestick highs are basically lining up with this very steep and sharp resistance trend line, and the support obviously being marked by the 120 level. So the market is really getting heavy around the 120 round number, and obviously, which means that eventually one side's got to give, and we will either see a move right back up or we will see a move to the downside. But just by looking at the implicit divergence, bullish divergence I should say, that we're seeing kick in here, and all of these lows and bar opens and closes that are just lining up with this former extremely important low around here and the 120 round number, we would really not be surprised to see the market actually push to the upside over here. Whether it's going to be a move strong enough to literally reverse this entire downtrend would be too soon for us to predict right now. But if we do see a move back up, we will likely be looking at this more shorter term support and resistance level marked by all of these lows around here and the few candlestick highs around here, to provide some kind of resistance for price as it rebounds off the 120 round number. If you look at the more bigger picture here, we've also been talking about a former consolidation box way back in the past that we've been citing as something important and a possible hurdle for price as it moves down after the breakout of the 122.50-ish area that we drew here earlier on, and that consolidation box is right around here. So you can see that this red line, which indicates the last traded price for this market, is sort of lining up closely with the mid-range of this consolidation box way back in the past in 2010 and 11. So all the more reasons to believe that some kind of buying coming to the market here. The 120 round number isn't exactly ruled out, despite the fact that we're in a more longer term downtrend, and the market was able to earlier on break through some very, very strong and solid areas of support.